world of technology. So yeah, let's go ahead and jump right in here. What I'm going to be doing is, for those of you not familiar, I'd like to provide a bit of background as to who I am. John did mention I have quite a bit of experience, and that is absolutely correct, both with and on Wall Street. I did start my career on the trading desk at Goldman Sachs, and from there I went on to run actually over 2 billion in assets, and that was for about 8 years, all of that taking place in Manhattan. But things really got exciting for me when I joined William O'Neill and Company. And they, of course, are located in Los Angeles. And Bill O'Neill, for those of you not familiar, is the founder of Investors Business Daily. And I'm pointing that out. That's a publication that is designed and all about introducing individuals to the world of fast-moving, high-growth stocks, but more importantly, educating on that process as far as getting in front of these big winning stocks just as they're poised to take off. And for 15 years, Bill O'Neill was my boss. I traveled the globe teaching portfolio managers and analysts just that system, that O'Neill system that gets you in front of these big movers. And more recently, 5 years ago, I did start my own investment research, and it's all about that very same system. I did begin by working with my institutional clients, but I evolved into helping self-directed investors. And honestly, that has been absolutely the most rewarding and remains the most rewarding part of my career. The individuals that I have shared this knowledge with have gone on to then be able to successfully invest, and they're super generous with sharing that with me. I get emails on a very regular basis, so it's great. So yes, with MEM Investment Research, I do have a top performing bi-weekly newsletter where I get into where I'm seeing the strength and those stocks that will benefit from that strength. We have a tremendous track record. All of that is on MEM Investment Research website. So I am also affiliated with StockCharts.com. Some of you may know me from there. I have 2 separate weekly shows, and I contribute quite a bit as far as articles and so forth. So worth mentioning. So you might ask, well, how did I get here? Very briefly, I moved to New York City right out of college with my very best friend, and I was not particularly sure of where I might land or what path I might take. But at the time, I was really enamored with the concept. I actually wanted to open my own restaurant. I really loved the fast pace and just the energy, and but not so much the hours. I was, when first in New York, was provided the opportunity to work at Goldman Sachs, of all places. And really, I wasn't even familiar with the firm at the time. Wall Street was not part of my vocabulary. This was a temp agency, and I was filling in for someone out in a back operation. So off I go to Goldman Sachs, and it was one of the most exciting days of my life. The energy there, just the millions of dollars being moved, and just an incredible atmosphere. So I really poured my heart. I was there for quite some time before getting recruited to the asset management, or called the buy side. Started out as an assistant and then slowly worked my way up. And another great experience, but that was in fixed income. Upon my arrival at William O'Neill, I was introduced to another exciting world, and that is, and still is, equities. I am just so enjoy the equity market. So that has been the bulk of my experience. So here I am now with you guys. So I did want to go ahead and start by talking about beliefs that you might have, whether it's about how the markets work, certain trading systems that you might be using. And I wanted to share a quote. Van Tharp. Some of you may be familiar with him. He's a top-selling author. And one of the quotes that really spoke to me, I thought I would share it with you, is that you don't really trade the markets. Really, what you are trading are your beliefs in the markets. And the reason I'm pointing that out is from there, in my work, I feel it's very, very important as an investor that you have a sound belief system, one that you believe in, that you feel strongly about, that can really, again, is going to help you in your decision making. So I'm going to share with you some of the beliefs that I've garnered over my many years working not just with professionals, but just every day, each week. I'm looking at thousands of charts and really analyzing the markets. And first and foremost is the belief that high growth stocks, they do trade higher and faster during the bull markets. And so also another belief is what I view as a fact that if you can diversify your holdings, there are always during the markets, there are going to be areas that are exceptionally strong. They're outperforming the rest of the markets, but these groups are going to ebb and flow on a daily basis. So I know there are believers out there that feel you should concentrate in one area. I would argue otherwise because technology, healthcare, and currently industrials, it's not throughout the week and even over a month period, you will see the strength ebb and flow. So you're really better served if you diversify it, not too much, but you're in those strong areas. Something that I talk about all the time during any type of presentation, and that is how important it is that you have a very solid exit plan. And I'm going to share with you my exit plan with some of these charts we're going to be looking at, because really not just to preserve your gains, this is going to be all about preserving your confidence. If you do begin, not every trade is going to be a winner naturally. And I can say this having worked with even professionals, seeing how they will select individual stocks. They're not always going to work, but if you can make sure that you have an exit plan so that you don't ride that stock down, that will erode your confidence. And that, as much as having a plan in place, is very critical that you have confidence. So also, I talked about this, that you have a strong belief in that system that you're working with. That's here I'm going to share with you as we move forward, one of the reasons that you do need to have a solid trading system that you really believe in. And then one other belief is that at the end of the day, the overall market trend really is going to be your top guide when you're putting money to work. You need to make sure that that proverbial wind is behind your sails. Are the markets in an uptrend? Is it safe to wade into the markets? So today I am going to be sharing with you a proven system, and it is based on that O'Neill methodology. But over my years, I have added to that. I have shifted areas that I have found to work as far as the markets. And this particular system that I am sharing with you was very many years in the making. So I'm going to again refer to Bill O'Neill. He has several best-selling books, How to Make Money in Stocks. So many of you may be familiar with this system, but the point is that it is not a system that was just thought up overnight. There were about, I want to say maybe 40 years, at least 25 years of studying, really looking at those market cycles going back over 100 years. And within every market cycle, there will be these big stocks that go on to advance several hundred to over 1,000%, these big outperformers. And what was uncovered is among these big outperformers, there are characteristics that are common among them, particularly before they take off. So this is what I'm going to be sharing with you today. And what we're looking at here is one of the reasons why it really is quite critical that you have this solid system, again, that you really have quite a bit of belief in. So this is a typical cycle as far as putting money to work. The stock begins to work. You're feeling really quite confident. And up here at the euphoric stage, you're feeling pretty much like a genius. But of course, inevitably, as with any stock, winning or otherwise, uh, there will be a pullback. And so if you don't have that system in place, of course, you will get to a point down here, panic stricken, where you sell, oftentimes at the bottom. I can recall being at presentations where Bill O'Neill was the speaker with professional money managers in the audience, and there oftentimes would be a lot of chuckling, just recognizing that. So it's not just for individual investors. Professionals will sometimes go through that very same type of panic stricken as it continues to decline. In fact, from my work when I first left O'Neill, I was going to invest my own money. I thought I could do that full time, and it was something that really I took to heart. But I very quickly realized, for me, I did not have an exit plan in place. Hard to believe, but that did come to light. I found it very shocking. So that was, in fact, one of the reasons that I did shift into the concept of sharing my knowledge to help individuals, so that you can, of course, get in front of these winners, but also make sure that you cut your losses. So all of this is going to lead you toward this consistency. And if you have this consistency in the way that you approach the markets and in a system that you believe in, you will outperform. If it is a system certainly similar, I would argue, the one that I'm going to be sharing with you today, but it is going to be all about keeping those emotions at bay and really following. It's not going to be a lot of rules. There will be some that are going to be mandatory, if you will, but by and large, again, having that continued consistency really will be important. So what will you gain by learning a system such as mine that has been proven to work over market cycles over the past 100 years? Overall, it will give you that ability to, of course, grow your assets. That's what we're all about, right? We're in the markets. We want to outperform. And with that, you'll go ahead and gain an ease of consciousness, if you will. I know this type of activity, certainly during the pandemic, we're not going overseas, but a lot of people are taking to the road. And I do have subscribers to my newsletter that are actively staying contained and safe, but they're traveling and can do so with ease as they stay on top of the markets and trade. So this is one of many things, of course, that you can gain from staying on top of a proven system that you believe in. So what if you don't have that system in place? So here's a prime example of a stock that was really doing quite well. This is FedEx FDX. We're looking at a current daily chart. And I'm taking us back to 2018. Now, of course, this is that bear market at the end of 2018, but having a system, this is a weekly price chart. So from my work, those that are watching, that are subscribers to my newsletter, will be familiar with this. When a stock breaks below, in this case, the 10-week or the 50-day simple moving average, from my work, oftentimes I will exit. There are a few exceptions, but by and large, a break below this key support has me heading for the exits, particularly if it's on heavy volume. So we can see that this type of negative precursor action would have kept you out of this very significant loss. But more importantly, with, for instance, FedEx, just this continued deterioration, any upsides being met with resistance. So pointing out, again, the real importance of having that exit plan. So let's take a look at what we are going to be covering today as we move forward. I'm going to be sharing with you current charts of the broader markets. We're going to take a look at where are the markets currently, what we can look forward to potentially for 2021. We're going to talk also about what some of the characteristics are, actually what causes a stock to move higher. And then from there, I'm going to share with you some of those common characteristics of these big winning stocks. I'm also going to share with you some of the sectors that currently have these winning stocks, and also share individual stocks as well as my outlook for these areas that are really outperforming. And then, of course, having that exit plan in place. So as we go through these charts, I will share that with you as well. So here we are with the daily price chart of the S&P 500 index. And from my work, I like to use these simple moving averages. This green is your 10-day simple moving average. This purple is your 21. And then this red is your 50-day simple moving average. So when we are in periods of market uptrend, such as now, oftentimes you'll see the markets trade above an upward trending shorter term simple moving average. In this case, this green 10-day. We did get a little bit of a pullback here, of course, at the beginning of the year, but the markets did in fact hit another new high today. And we are, by all accounts, in a confirmed uptrend. So let me go ahead and share with you some of these momentum indicators that I also use. This is a relative strength indicator, RSI, and you want that to be above this 50, which is neutral and trending upward. So we do in fact have that taking place. I apologize, a little jumpy, but we can see going back here during periods of correction and then a pullback, how this RSI can oftentimes lead, but we are currently very much in a confirmed uptrend. So taking a look here at a longer term view, this is a weekly chart of the S&P 500, and oftentimes as far as individual stocks as well. I'm going to look at a daily, a weekly, and in some cases an intraday for these really fast movers. But the weekly chart is going to give you that nice longer term perspective. For those that are in the markets, perhaps you're saving for retirement, you're not quite as active, this type of view can really be quite helpful. So this is your 10-week or 50-day simple moving average. And you can see this longer term view would have kept you in the markets and also in a lot of stocks during the recent pre-election pullback, for instance, and other periods. So you're not as shaken out or quite as active. So by accounts here on the weekly, the stochastics are also trending upward. So we are very constructively in an uptrend with the weekly chart as well. And surprisingly, as we continue to march to new highs, we're not seeing an overbought quite yet on that RSI. However, we can see historically that it can remain up here. But for me, it is one of the first, certainly yellow flags if we do get into that overbought position. And then, of course, even longer term is the monthly view. And this, again, institutions, when they're looking at individual stocks, will use that monthly view. Again, they want to be not shaken out, to be able to stay in. So this 6-month moving average can be really quite helpful. And we can see the RSI and the stochastics positive. So pretty much all systems go currently in the markets as we stand now. Of course, you will want to have a system to consistently stay on top of that, particularly if you are shorter term in your as far as your trading activity. So let's get started by talking about what causes a stock to move higher. And really, it's quite simple from my work. It's going to be heavy demand. That's going to be led by these institutions. These are the guys that are running billions of dollars. So really, it is their footprint that you are seeing in these charts. So we can talk about, I'll get a little bit more into that heavy demand as far as accumulation characteristics. But some of the other, one of the primary reasons, of course, from my work that drives a stock higher is going to be strong earnings and sales. And that's going to be both current and estimated. And we are currently in earnings season for Q4. And for a lot of stocks that are potentially just beginning these big explosive moves, earnings season is by far one of the biggest drivers of these stocks as they really start to take off and advance, given that they come in with good numbers. And then also these earnings and sales are going to be driven oftentimes by a company that is creating an innovative product. So they are going to make a particular system more efficient. They're going to increase productivity. And in turn, that's going to drive that high demand. And then, of course, earnings and sales. Another way is if the demand is what's called market driven. So we certainly are entering into a new phase as far as the government. And there is anticipation of an increase in government spending. So with infrastructure, clean energy, that type of backdrop is also going to be another way that stocks will be move higher. So let's take a look at an example of a big winner. This is RNG, Ring Central. So we're looking at a weekly chart. So each of these bars is 1 week of trading activity. So we can see these arrows that are directed here toward specific weeks. And what they are when the company has reported earnings. You'll see these big weekly moves as the stock continues to advance. So every stock that I am going to be sharing with you today is a stock that either was on my MEM investment, my MEM Edge report, my biweekly report, or is currently on there. So I am sharing with you real life examples. So we can see RNG. This was a really big winner for us, one of many. We were able to pick this stock up back here when it broke out of this nice multi-month base in the beginning of 2017. And the stock did go on. Now, of course, it's not going to be a straight shot. This weekly chart may have kept you in, but with these winners, there will be ebbs and flows. There will be periods of certainly just normal performance. So we will get in and out as that prevails. But more to the point here is this stock base breakout here, big volume on earnings. Then the stock continues to report super strong earnings. So here we are drilling down into a daily chart. You can see it gets a little bit sloppier. This, of course, is that late 2018 bear market period. But the bigger point here is this concept of having that system in place so that you can, in fact, know, is it time to exit, such as this period here when it broke that 50-day on big volume. And then this is a MACD, your moving average, convergence, divergence. That is another momentum indicator. And it will help you with that exit. But of course, again, this kind of back and fill that will take place, having that system will help keep you in these big winners. So let's go ahead and move on. I want to share with you some of those characteristics that I spoke to you about. And so what we can see here is, actually, what we can see here is that the common characteristics that I'm going to be sharing with you are those that I spoke to before, as far as among these stocks just before they take off. So let's go ahead and get into that. I talked about strong earnings and sales being a very primary driver, and we can see both sales and earnings, not only currently, because you will see companies come in, have a great quarter, but you want to have a backdrop or confidence that that earnings is going to continue. And we are, in fact, seeing that as we go into this current earnings season. What is happening is these companies that are coming in, not even with the best of numbers, but if management is guiding, if they're guiding higher going forward, these stocks really are being rewarded. So that's something to keep in mind as we go through this earnings season. So that, again, is from my work. This is the absolute primary driver. So let's go ahead and take a look at some of these others. We can see this is an example here of West Pharmaceutical. And again, an example of a stock. This was a big winner for us out of this bear market. And what we can see is this is a daily price chart of WST. And I'm highlighting here this, we actually put the stock on as it emerged and broke above these shorter term simple moving averages. This is very critical for me when I'm looking at downtrend reversals. We were able to get into a lot of winning stocks that had strong earnings, and then also an outlook for continued strong earnings despite the pandemic. So we got into this as it broke back above these shorter term simple moving averages. And then we can see that this was prior. Analysts were raising estimates going into earnings. So by the way, if you do see that now, for instance, there's several companies that are going to be reporting next week from my list. And I'm seeing analysts raising estimates right before their report next week. And I will tell you, analysts will not do this unless they have some, not insight that's not available to you, but they will have some, they've done the work, and they're not going to put their neck out there if they don't really believe that those earnings are going to come in quite strongly. But back to WST, the stock did in fact come in with 38% year-over-year earnings, gap up here, and nice advance. So we stayed with West Pharmaceutical, another strong 40% year-over-year earnings here. We did remove the stock when it broke below this 50-day simple moving average, and it did so in conjunction with the negative RSI, and then the MACD did turn negative. We had a head fake here, oftentimes from my work, just from my many years. I won't remove it immediately. If it breaks, I want to see how the stock ends the week, unless it is very decisive and on heavy volume. So we did get out of the stock, but here again, we re-entered WST here more recently, about a week and a half ago, as it broke back above these shorter term simple moving averages. So again, earnings and sales as your driver. This particular company is involved in providing parts so that drugs can be administered. And now that was the big driver back here during the pandemic as individuals contracted COVID-19. They were able to help with the administration of some of the many medicines that were involved in helping people. And so from here, now it's more about vaccine. They do a lot. This is a global company, and they provide the injectables so that the vaccine, as well as a continued growth in, unfortunately, with virus cases and the need for drugs there. So stock is part of a strong industry group. So let me explain that. A lot of my work, I talk about sectors. I use the 11 sectors in the S&P 500, and then of course those sub-industry groups underlying. And let me explain, I'll share with you why it's really important that the stock that you get involved with is part of a strong industry group. This is from O'Neill's How to Make Money in Stocks book, but it was something that was also ingrained in me from my many years with the company. The majority of leading stocks, hands down, are going to be in what are called these leading industry groups. Quite simply, these are industry groups that are outperforming. They're leading the markets during a bull market. They're leading the markets higher. So a study has shown that 37% of a stock's price momentum, it's directly tied to the performance of that underlying industry group. And then 12% is due to the strength in the overall sector. So overall, roughly half of your stock's move is attributed to the industry group that it's a part of. So very critical that you stay on top of that. That's a big part of my work. I want to be fishing in those ponds that they're exhibiting strength. So let's take a look at an example. What I am sharing with you now, quite simply, is a comparative chart. This blue line is the S&P 500. It's taking us from that March period in 2020, the end of March, to the current period. And the red is the semiconductor index, SOXX. So what I'm sharing with you is really how clear cut the outperformance of semiconductor stocks has been since the markets, since we turned out of that bear market. The S&P performed 45%, and semiconductor stocks were up 85%. So really significant outperformance. There are a lot of reasons for that I'm going to get into as we move forward. But more to the point, just sharing with you a quote from my March 15th report. There was still a lot of uncertainty as to where the markets may land. Could we recover quickly? But in that particular report, I did talk about these semiconductor stocks, that there were definite themes that were starting to take shape. Technology was really coming on strong, and most importantly, semiconductor chips, because they're really important. They facilitate data storage, cloud computing, and all about the shift away from corporate offices, and employees are working from home. So staying on top of that group movement, where is that outperformance, and then having sound reasons as to why. That's also going to help with your conviction. So let's take a look at one of the winning stocks out of the semiconductors. This again is from my MEM Edge report. We are still in the stock. It did come out of, broke out of this nice flat 3-week base here. And another one where the stock, we put it on ahead of earnings. It's not for everyone, but if you know the group, you know the company, you can do that. But we were very familiar. Taiwan Semi is the largest manufacturer of semiconductor chips. So analysts upgraded ahead of earnings. The stock broke out of this nice base. So we entered into it, and sure enough, they did come in with 93% in year-over-year earnings. So, and then subsequent to that, they did report another excellent quarter here, 46% year-over-year growth during that second quarter. And they did just come out with earnings this week. And this is a prime example of a company where the earnings weren't superior, but management guided higher for actually the next 5 years. They're looking for, we're in a semiconductor super cycle. I don't want to get ahead of myself here, but TSM is up 112% from our entry point here. So in addition, I don't just put stocks on the list and look the other way. Each and every week, and then I have a midweek report. You're getting entry points, when to re-entry, when to just let this one consolidate while you take advantage of moves elsewhere, and so forth. But at the end of the day, a nice advance, and it's continuing to trend higher. So let's take a look. I talked about semiconductor, that the group was outperforming. This is a view that's taking us to the end of October last year to currently. And as we continue to see strength, we continue to add stocks. So there was a period at the end of October where I was looking at whether Lam Research LRCX or Lattice Semiconductor LSCC. Of the two, they were both above this red semiconductor SOX index. So they were both outperforming. They both looked to be viable candidates. We did go with LRCX. And one of the primary reasons is because the company had superior earnings growth prospects for this year. LRCX had 44% earnings growth for 21, at LSCC 15%. So we did go ahead with Lattice. As we've owned the stock, we found out a lot more that we love about it. It's in memory, DRAM memory chips, and there's a there's a big supply squeeze of these memory chips, not with quite a bit in the way of demand. But let's take a look. So when you can have that differentiator that can help you decide on stock selection, of course, there are technical reasons. I'm looking at the chart as well. But we can see LSCC has gained 25% over this 60-day time period, as opposed to Lam Research. Actually, it's a longer period, but Lam LRCX is up 60% over that. So pretty significant difference there. So that there again, that system, having that in place to get you in front of not only that industry group, but also making sure you're in the winners within these. And Eric, I can see you're asking comparative charts. Yes. Oh, yeah, they are available. That's exactly where I got it, on stockcharts.com. It's called Perf Chart, and you can do this for any number of indices and individual stocks as well. So ours is asking about Can Slim, and actually that is a wonderful question. I think I'm where I find a different edge from IBD. Yes. So actually that is a fantastic question. Why my system is different than Investors Business Daily as far as breakouts. I can tell you I get into stocks earlier. If you look at that WST as an example, many other examples where their system very rules based, but they are going to oftentimes IBD wait for that breakout to take place. I'm going to get into stocks a lot earlier. I've gotten into, for instance, energy and financials over the last 2 to 3 months, huge winners in that space. I have not seen them even tiptoe into that area. So the list goes on. I have, over my many years, developed my own system and my own rules, if you will. But by and large, I will get into these stocks quite a bit earlier, and I will stay with them quite a bit longer as well. And then with me, you're getting the precise entry points as the stock advances. So let's take a look at the semiconductor SOXX, and this is just one way of many that you can stay on top of these industry groups. You've uncovered this super strong semiconductor industry, but they aren't going to go straight up. We're looking at a daily price chart, so paying attention to those ebbs and flows. The semiconductors did pull back in the beginning of September. Then again, with this pullback here, pre-election pullback, a lot of tech names. You're going to want to stay on top of this, because if your stock is pulling back, for me, it's critical to know, is it part of the overall group movement, or is something wrong with my stock as far as maybe fundamentally, maybe I need to dig in. So Andres is asking how many stocks are in my newsletter. It's going to vary depending on the where we are in the markets. Right now, we're in a super bullish phase, and I do have over 40 stocks on that list. But each and every week, the today, actually week to date, this week, 3 of the top 6 performers in the S&P were on the list. Last week, we had similarly huge performance within that finite number. So getting back to this particular view here as a way, just know that these strong industry groups, similar to those stocks, it's not going to be a trajectory straight up. You're going to get these pullbacks. From my work, if you get familiar with that group, get familiar with the underlying stocks, you are going to be able to stay with these pullbacks so that you can take advantage. But for those that may be more active, you can certainly put your money to work elsewhere. But this is how you can stay on top of that. Those momentum shifts, the moving average, convergence, divergence, trending downward, but always staying positive. So that can keep you with it. So let's move on. And I talked about one of the other prime characteristics of these big winning stocks, and that is the company has either a product or a service that is innovative. So what exactly does that mean? During down periods, bear markets, when I was with William O'Neill, the phones were pretty quiet. People really didn't want stock ideas, but we weren't just sitting there. O'Neill did have us go in and work with him and study those prior market cycles and look at those companies. McDonald's was a big winner in the late 60s. It was a whole new concept, this concept of fast food and things of that nature. So this product or service being innovative is, for the most part, a way that a company is now going to allow a service to occur faster. We're seeing a lot with technological advances that are taking place. Data can be crunched, and you can go through it quite a bit faster, a lot of artificial intelligence, automation, and so on. So all of this is going to drive demand. If you can produce a product, cloud computing software to a company that's going to allow their workers to work remotely, there's going to be a lot of demand. So that's what we're talking about here with innovation. It's going to provide that push that in turn will go ahead and drive those earnings and sales, which, as we said, ultimately will have these stocks and push them higher. So let's look at an example of an innovative company. This is a stock that was another winner for us, PayPal, PYPL. And among their innovations, the company did acquire late in 2019, they did acquire a company called Honey. And this particular company is a search engine. If you were looking to purchase a product, they can not only tell you where to purchase it at the lowest price, but also they'll keep you apprised. If you don't purchase it, they'll give you alerts. The stock has dropped. More importantly for PayPal, those people then purchase that product using PayPal. It's been a big boost to sales. They also rolled out a QR code payment system here in May for that touchless pay concept. In more recently, in October, they added a cryptocurrency app so that you can buy and sell Bitcoin, also purchase products with Bitcoin. So that's the kind of innovation that is going to continue to keep PayPal, which already was innovative with digital promotion of digital purchasing. We can see that the stock has been really a nice winner here. We did get into it as, again, broke above these simple moving averages here at the when this bear market did in fact end, and the stock did go on. It was an 80% winner, 81% winner for us, but we did remove the stock. This is that exit plan back here in September when the stock did break below this 50-day simple moving average. Take a look at this high volume. That's going to be that real decider for us. And then your outside momentum indicators turned negative as well. We did get back into PayPal back here in December, and the stock is looking quite constructive. So we talked about stock being under accumulation. The way that you can tell that is an increase in volume. So basically your average volume over the last 50 days, if you see that volume pick up, that's going to be one critical key that there could be a shift in the market sentiment about that particular stock. So it's particularly as the stock is breaking out of a consolidation period or a base. So again, it's indicating that there are buyers in there. It's going to validate that breakout and oftentimes continue that upward move. So for my work, volume is a very critical component that's going to give you that confidence that there's more upside. So here's a prime example. This is a stock that we do still have on our list, Farfetch, FTCH, and the stock did have this nice base breakout here back in the end of October, and the stock did go on to have a secondary base breakout on big news. That's another component if this breakout is happening, whether on earnings. In this case, the news was that Baidu is putting $300 million into this particular company. It is a platform for luxury goods. It's a software platform for the purchase of luxury, primarily apparel. But take a look. What we want to look at here is the accumulation characteristics. So this is a stock. We put it on the list, but even though it looked a bit extended, we continued to advise adding to your position. And it was all about this volume. This volume is telling us that institutions wanted in. The prospects were super strong and remain so. So during this continued accumulation phase, you could continue to add. The stock's up now about 114% from this buy point. So again, that accumulation is the volume characteristics are really going to be very helpful. Let's take a look at some other traits of stocks that are poised to trade higher. If it hits a new high, this is all about overhead supply not being in place. That's a 52-week high. We talked about a company reporting strong earnings, and then we want those outside momentum indicators to be positive and the price above those shorter term simple moving averages. So let's take a look at an example of a stock that hit a new high. Coupa, another winner for us. We can see this is taking us back coming out of that bear market. At this juncture, the stock was approaching an all-time high. And this this gap up here was the company reporting earnings. So lots of positive characteristics taking place here. Coupa did go on to be about 100% almost winner for us. But then again, this break is going to be when we exit. Big volume on that downside there. So I want to share with you at this juncture one characteristic, because the characteristics common among winning stocks, there are about 6 or 7 that are very critical, but this is one that I'm going to share with you right now that absolutely every winning stock, and I am taking you back again over 100 years, studying when Facebook came public, when that uptrend began. It came public and pulled back, but I can go on and on. So one key necessary characteristic is a positive chart pattern. And a lot of you may not know that, but looking at these charts, it's going to take time to master. I know when I first started at O'Neill, I was given at that time, it was a lot of it was printed, and honestly, I was not even sure which way to hold the chart. I was not clear how to read it. So if you don't have that skill, I have a feeling that a lot of you watching perhaps do, but if you don't, it is a skill that is well worth your time to learn how and what a stock breaking out of the base, what does that look, what other characteristics. So when you can put that together with the other characteristics that we're talking about, you really can be on your way. So here's an example. I shared with you Coupa, but here is a nice base breakout. The company reported triple-digit earnings, and it was the beginning of a nice advance. So disruption, this is an example of a company that's innovative. Of course, Shopify, I'm sure many of you are familiar with this stock. Huge earnings as the stock continues to advance. And Shopify is part of the software group. And so this is where paying attention to those industry group dynamics is really going to serve you well, potentially get you into a stock such as Shopify. With this is IGV, the tech software ETF, super strength out of this bear market. And then from there, ideally you can get in and uncover these big winners. So here we're looking at another view of Shopify, taking us to September. We did put Shopify on in December prior to this bear market as it was beginning to potentially break out of this long base. We stayed with Shopify through this. We only had a very nominal loss because we had gotten in early, and it did go on. We were handsomely rewarded with 200% gain in Shopify. But again, that exit plan there, we are not in Shopify yet. Another big winner out of this bear market was Lululemon, LULU. Of course, leisure wear, a lot of people working from home. Again, there's your exit plan on Lulu. So let's go ahead and move on, because I do want to share with you my views as far as the current market, where we are. Technology is an area that I feel will continue to lead into 2021. And a lot of that has to do with this cloud computing. Now, of course, it's been around for years now, but we are continuing to see a transformation. Last year's pandemic did force the hand for a lot of companies to migrate to cloud computing, but it is not completed yet. Also, businesses, when you look at Facebook and Google, they're talking about September before workers do get back to their offices. So still continued demand there. The rollout of 5G networks is really just in the beginning stages, and that's going to take us to a lot of technology companies. Artificial intelligence is continuing to improve productivity. So while these themes aren't particularly new. A lot of them, particularly 5G, has been talked about for a long time, but the new iPhone with Apple is showing us really how much demand there is out there, and then of course increased bandwidth for people still at home. So here's a chart of technology coming out of that bear. It was one of the first industry groupings, but a more current chart here. This is a daily chart. We had a nice move in tech today that broke us out of this nice 2-week base. So we are in a nice confirmed uptrend here with technology. So what we are looking at here is my favorite sub-industry group within tech, and that is semiconductors. So we did talk a lot about semiconductors. They already were a big leader last year, but there is continued growth. Semiconductor stocks are what are called cyclical, and they're supply and demand driven. And there is an awful lot of demand, and the supply just isn't there. So the growth that we've seen is, I expect, going to continue well into 2021. These companies are starting to come out. ASML came out today, Taiwan Semi earlier, and they're all talking about their management, about this supply issue that's being met with very, very high demand. So these semiconductor chips are used in very, very many industries. So as far as industrial, consumer, and so forth. So there is a global chip supply, lack of supply in the face of very heavy global demand. So this is one of my very favorite groups. Qualcomm, one of the better names in this space, big gap up here on earnings. This is a very another fan favorite here, but here we're looking at Taiwan Semi again. I think I just really just updated their recent earnings report, but one of the biggest, and it is absolutely the leading stock, primarily because of that outperformance, but they're also the largest. The semiconductor industry really has very high barriers to entry. Anytime if a new chip is developed, it costs hundreds of millions of dollars. And there's not too many companies that are going to jump in. So what's happening is we're seeing continued consolidation as these bigger firms buy smaller ones. So it's a very, I think there are about 81 stocks in that industry group. Another area that I like at this juncture is biotechnology stocks. And so we're seeing a lot faster approval for these critical drugs. And it's not just COVID related, it's cancer and other major Alzheimer's and other diseases where these critical drugs are needed. But this new technology that's really helping, in addition to government red tape that has been pulled back. Trump was critical with that, and it's expected to be carried through with Biden's period, these faster approval times, unprecedented advances. So it's all going to be due to these new technologies. And then, of course, major advances in treatments as well as the vaccine, these larger pharmaceutical companies. That's another area where we're seeing a lot of merger activity that's taking place. So I'm just going to share with you here this biotechnology ETF. And this is a monthly chart. I want to point out to you this 5-year base. IBB is the ETF that we're looking at. And take a look. We are breaking out of this very lengthy 5-year base. A lot, again, in the way of innovation. A lot of these stocks are powering to new highs. And the longer your base, when you do have that eventual breakout, the longer the advance out of that base. And we can just go back here to this 2012, very lengthy base breakout, and take a look at this 4-year advance. This was all about DNA. More recently, DNA and genomics are also a new critical area because they're able to go in and actually, in this period, it was just examining DNA. Now there's ability to go in and actually change an individual's DNA. So that was your monthly chart. A weekly chart, we're seeing another nice base breakout here. So we're in a nice confirmed uptrend. And so this is ARC Genomic, ARKG. It's one of the top ETFs within biotech, and we can see it had this nice base breakout. It's been a big winner for us. These are some of the top holdings in here. They're up triple digit, a lot of these stocks. So Jake, you were asking about the exit plan, and I really was hoping that I was clear on that. But again, it is essentially going to be a break below that 50-day simple moving average when you compare, and you also put that together with those momentum indicators that are turning negative. So hopefully if you can rewatch this, you'll see that I did provide about maybe 5 or 6 examples, but it is worth repeating and really getting your arms around a good exit plan. So let's talk about screening for these winning stocks based on what we've just reviewed. One way that you can do so is screen for stocks that are hitting a new high in price. And you will want to narrow it down from there. But this is the kind of screen. It could be daily, it could be weekly. Of course, we're in a bull market, so it could be a very extensive list. So you're going to want to then, from there, look at those stronger industry groups. I tend to traffic in higher market cap stocks because they are more liquid. Of course, I am getting more into these small caps as they begin to outperform and look very attractive. And then another way to screen is quite simply a stock that is up on volume and it's in a strong area of the market. That's a very simplistic way, but then when you can uncover that the fundamentals are strong as well, that can be really quite helpful. Jake, that is a great question. I'm appreciating that you're asking that. A lot of these companies have already gone up significantly. So those good entry points are going to be on the pullback. So please don't be put off by the fact that they've already advanced. These stocks, the average length of an uptrend for these winning stocks is 18 months. Oftentimes it'll be for a multi-year period. And then is that stock outperforming the markets? There are many ways to screen for that. Just take a look at year to date. We're only 3 weeks now into January, and just take a look. What screening for stocks that are above the broader markets? The S&P is up probably about 2+%. I can, and then I'm sure your list will be pretty extensive there as well. So then screening for stocks that are exhibiting strong earnings and sales. We're in earnings season now, so this is an ideal time to do that type of a screen where you're looking for those strong, not only current, but projected growth going forward. Steve, as far as minimum volume, take a look at that volume on average over the last 50 days, and the volume, if it's greater than that, that would qualify as high volume. And then is that stock breaking out of a period of consolidation? Is it breaking out of that base? So these are various ways that you can screen to help get you in front of these big winning stocks. So with today's presentation, I did want to introduce, and I know I talked an awful lot about my MEM Edge report. And it is a report that you can get these stocks delivered directly to your inbox, complete with those precise entry points. And then, of course, if we see them breaking down, those exit points as well. You can start your 30-day trial right now, today, and you'll have access to Sunday. Actually, we did it on Monday last weekend. You'll get access to that report as well as today's report. A lot of stocks on that list really turned bullish, probably about 12, and I highlight them in today's report, why they are currently just got pushed right into buy zones based on the action this week. I think my view, my sharing with you, that tech chart is going to be one of the first hints, but if you take that trial, you can use that link. I believe it is in that chat box, and take advantage because you can have 4 weeks for $7. Here's what you're going to get in each and every weekly issue. You're going to get a detailed view, not only of the broader markets, but also that sector. Where is that strength? And I can tell you, I highlighted 2 industry groups today, but there are several that are really coming on strong. These are recovery industry groups that are new to the market, a lot of turnaround stocks that are just exploding to the upside. So I talk about that. Where is the strength? And more importantly, what stocks can benefit from that strength. So I believe simplertrading.com/report, it's at the bottom here, and I believe they did add that. And that midweek report is going to share with you critical developments since that Sunday report, as far as industry groups moving in or out of favor. We do add stocks throughout the week, but that Wednesday report is just going to highlight what's new as far as jumping and being pushed into buy zones, stocks that, of course, will happen, and then what to be on the lookout for the rest of the week. There are, again, these recommendations. They are ranked in order of conviction, so you'll get a really good sense of what is being highlighted as far as being in a buy zone. So here are some examples. We did cover a couple of these names, really only about 3 or 4. We didn't get to every of these stocks, but here are the recommendation dates. And you can see that a lot of really explosive moves, if you can get in front of these stocks just as they're really taking off, taking into account those characteristics that I did share with you. And Todd had a great question as far as an average time that I'm with the stock. And that's really a great question. Really, it's going to be all about where we are in the market. So a lot of the stocks that I'm adding now, they are added in the fall. They have been on the stocks, the list. So in answer to your question, I would say about maybe 4 to 6 months sounds on the long side of an average, but that would probably be very accurate. And their question did come up as far as pricing after that 1 month. It is 97 per month. So you can take advantage of that. And the question is, well, do I publish an exit? And absolutely, that's a very critical part of the service. If we had a live charting, I could share with you some of those recent exits, and you can take a look at Salesforce CRM. That would be a great example. You'll see when it broke the 50, it had been a winner, and we immediately exited the stock, and it's still very much in a confirmed uptrend. That was last fall. So Eric is talking about my stock charts videos, and that is how you found me. Yes, Eric, thank you for offering to give a testimonial about my MEM Edge report. One thing, Eric, thank you, because you are reminding me, and Chris, thanks for signing up. My MEM Edge report, one common praise that I get from emails is that people, either they're new to the market or even those that have been in the markets, it's very, very educational. I did have an individual about 8 months ago. He was reached out from that stock charts, and he was looking at my service as well as 2 to 3 others that are also on that website. And at the beginning of the new year, he did email me and just thanked me profusely. He is now actively trading full time. And I hear this a lot too, that people hear my voice in their head. I don't know if that's a great thing, but it is very, very educational, this newsletter, as far as just telling you and helping you uncover how does the market work? Why is that group in favor? Why is that industry group? Okay, that's how I can take advantage of it. Why are the markets up this week? Why are they down? And so it just gives you this really good, strong foundation. And oftentimes too, I'll hear from people after 11 months or so, they'll say, well, I can take my training wheels off now, thanks. But I have had people come back after that period as well. So let's see, were there other questions? Oh, Randy, thank you. He agrees that there is very good information in those reports, and I appreciate that because really this is why I am doing it. I thoroughly enjoy. I'm all about educating people and sharing again that so many years of experience so that others can also take advantage of this knowledge and really go on to outperform. Liz had a question about commodities, and absolutely, I have, you can see here, Halliburton, Devon, we got into those stocks mid-November. They're up 40, 54%, so we're all over energy. So we do get certainly into commodities, and I'm not quite sure what site is down, but you can use that link there. And there was a question where my signals did not work, and gosh, I'm saying this in honesty, it doesn't happen often, but when it does, I'm very, very quick to acknowledge that. I'm trying to think. Viva, VEEV, we did put that on, and it did not, the downtrend reversal did not take hold. But since then, this week, it's looking to take hold again. That was one from about 2 weeks ago. So I'm very quick to kind of take the lump. We got in, we got out ahead of where we put it in, but it did fail. So Visa, thank you, Sal. That's a great one. Yes, that was another recent one that, and I'm honestly still baffled why Visa went down. That stock, there was no real news. Jean, you were asking about having 3,000 to put to work. Yes, and you can easily grow that. I'm not sure, I wouldn't tell you everybody to go on margin, but that's always an option. But if you look at some of these returns and you put that $3,000 to work and it went up 50%, you're certainly a heck of a lot better. And this was over a very brief period of time. I've had stocks last week, several stocks up 16%. So you can easily grow an amount. It doesn't have to be a huge amount that you're starting with. And then Todd had a question about options, and that's something that I am going to be incorporating into my report. As you know, Simpler Trading is all about options. They're the experts, and I'm going to looking forward to capitalizing on that and marrying that with this. At this time, I do have a fair number that trade options and use this service to actively do so. And Jeremy was asking about that exit signal. And I'm really glad because I talked about how important that is. The daily close below the 50. So again, it's going to take into account, is that break below the 50-day on heavy volume? Is there negative news that's coming into place? For instance, negative earnings with that break. And then some of these really big mega cap stocks, Amazon comes to mind, they'll just meander below that 50, so I'm not going to be as alarmed. But if it's a stock that is not as widely followed, it breaks below and it's on news, history tells me that exiting at that break is definitely going to serve you well. And if you think of it, you can always get back in. But history, gosh, 80, 90% of the time, that break is going to be a pretty darn good signal. So Sal talks about, basic moving averages. Yes, that's a critical piece of my work. I use those simple moving averages because this is what those institutions use. We talked about the questions here. I could probably scroll back up, but if they are using those simple moving averages, these are the guys that are moving millions, billions. They're making these charts, so I continue to use those. Sal, thank you for your compliment. I really appreciate it, and I'm glad that you and other subscribers have really been able to benefit from the information that's being shared. And I did have, let me just make sure. Todd asked how I manage a bear market. I gave that one example with Shopify, but for the most part, I will go probably 80% into cash and hang on to those stocks that have real conviction. So let's see, Daryl, I'm not sure as far as your account, but certainly I can't imagine that you wouldn't be able to uh, purchase it. So, uh, 5-part series of winning stocks. Oh my gosh, you purchased my course. That's fantastic. Yes, and you totally changed your trading and your confidence. I'm so pleased to hear that. That's another, I hear that all the time. I have a family, the dad is teaching his daughters how to trade, and they're using it. A mother daughter learned from that course and have gone on to great success. So that is super fantastic. I, of course, love hearing that. Neil, I apologize. I didn't get to your question about recurring annual patterns. And there are recurring patterns really on any type of time frames. You will see, and I use that a lot. I talk about stocks having their own personality and where they will pull back to a certain moving average when they do pull back, and all of that I talk about in the newsletter. I don't delve into crypto. I am bullish on it. I view my PayPal as a crypto play, and I'll look at other stocks involved in that as well. Steve, addressing your question. I realize someone mentioned that you guys can't see all of the questions, so I should be more clear as far as answering them. Lisa is asking only stocks. Yes, at this time, but we are looking. And yes, Sal, NVIDIA did have that sell signal when it broke below that 50. So Matt had a question about do the newsletters balance providing open and closing instructions based on my analysis? Absolutely, yes. When to enter a position, when to exit, and then also as the stock advances, providing precise buy points on when, if they get ahead of themselves, here is the pullback point. And then also explaining the analysis so investors can learn. Yes, so I think I answered that question. That over time, this newsletter will provide you with a very sound foundation, the knowledge so that you can then come to your own conclusions independently and carry on. Of course, I'd like everyone to stay with the newsletter forever, but I have a number of very long-term subscribers. So let's see. So I think let me go ahead and make sure that I've answered everyone's question. I do want to thank you again for taking my average time in stocks. Yes, we did talk about that. And I do explain how I come to that entry point. I don't just say $37. I'm very precise. It's not only a dollar amount, it's going to be actual, here's where and why. It's all about educating you so that you can take that knowledge to other stocks that aren't on that list. And Dwight, thank you he said, informative and welcome aboard. And I do appreciate that. Everyone at Simpler has been very, very welcoming, and that has been absolutely wonderful. And let's see. Oh, Prince, he actually purchased my course and he said they were excellent and he would recommend it for everyone. Super. Thank you. I appreciate that. I put probably about maybe too long a year, but I did put a lot of time into creating that course and making it so that I was funneling a lot of information down into a concise, fairly short. It's not going to drag on. Hopefully this presentation today hasn't dragged on. But yeah, so Joel, yes, you do get an email with new recommendations as they come on. We're going to get even more live with Simpler Trading. I am just this year new, but we are going to get even more updated as far as the ability to get up to the minute updates online. So let's see. Okay, yes, so they are working. Those of you that are experiencing difficulty, they are working on that so that you can access the trial for the report. And Mike said he's enjoyed my commentary on Simpler and he's followed IBD for decades. Yes, and great. I'm glad to hear that you are a believer. And Maddie missed the part of how you can, after the trial, it is $97 per month, and there's an ability to cancel at any time. You're not tied in. So Chris said that the link is working, but there's just no confirmation that the link is working. And Daniel is someone else that learned a lot from my course. Thank you. And I want to thank you because this is for me what it's all about. Just really helping people. Again, over the years, heard from people that they're close to retiring and they want to secure a bigger nest egg, or even those that had an individual that wanted to start his own business, and through our work, or my work, was able to put aside some nice gains so that he could go on and do that. So it's those kind of stories that really do keep me going. So let's see. John was thanking me for the presentation, and of course, you're welcome. And Eric watches my show every Friday. I appreciate that. I have a lot of fun putting that together. That's on stockcharts.com. And let's see. Oh, Zahn. Okay, I understand what you're saying. You were in the course with Mark and David Ryan. Yeah, I did have someone that took, I'm trying to recall Mark's last name, but David Ryan, both super traders. They do have a course, and it is similar, no doubt. They have that foundation. David Ryan, I'm trying to remember if he was there for maybe a little bit of the time that I was with O'Neill. But again, I guess some people are continuing to get errors. The other thing that you can do is go to my MEM Investment Research, my website, and there is a direct link there. I apologize. I don't know why that escaped me. I should have mentioned that sooner, but meminvestmentresearch.com, and there is a direct link. It automatically gives you that deduction, and you can take advantage of that trial. So, yeah, let's see. I want to make sure my take on weed stocks. Yeah, I mean, it's a vibrant look at Tilray. I'm not as familiar with ACB, but the play that I have for the cannabis stocks is, I believe, IIPR. It's the REIT stock. It's that they actually provide industrial space for medical marijuana buildings. So that's my play, and certainly the average annual return, Lisa, that is on my website, MEM Investment Research for 2019. We're still working on getting that 2020 number, but I can tell you that we had a big year last year. Yeah. And then I don't trade the SPYs or the Qs, but I write about it all the time in my newsletter. It's a big part. I want to make sure that market backdrop is there and that it's strong. And Ben is asking about a link to my course. That is on my website as well, meminvestmentresearch.com. Judy is thanking me that it was informative. Let's see. Oh, great. So you did sign up. I'm super excited, Judy. I'm looking forward to sharing my information. The course that he's referring to is a main course that is 5-part. It's called Mastering the Art of Uncovering Winning Stocks, and it covers some of what we've gone through today, but it really gets into more of the nitty-gritty. So that's what they're referencing. So Natalie asked, do I take into account stock history? Absolutely. That is absolutely a big part. History is, when you're looking at trends, it's all about looking at history. And I do look at new young stocks. Yeah, a lot of the IPOs that are really skyrocketing. Bill.com is one. I'm trying to think of some of the others. But yes, it's not just these big, older, heavyweight names. All about looking where is that vibrancy and why are those newer stocks doing quite well. Raj, that sign up link, again, you should be able to go to meminvestmentresearch.com if it's still not working. Helen took a lot of courses with Bill O'Neill and David Ryan, and Bill O'Neill signed your book. That's fantastic. So great. You are probably well on your way as far as outperforming these markets. I took several business trips with Bill O'Neill, visiting some of these bigger institutional clients, and just a fantastic person. Let's see. So thanks for my advice. Okay, I want to make sure I'm getting everybody's question. So the website, meminvestmentresearch.com. And yeah, so Gabriel, if you join the service, jump into those open positions. Don't wait for new picks. These on a weekly basis, I'm trying to keep that list refined. And if those big winners are still working, you're going to make just as much as if I put a brand new name. Last week, GM was up 16%, Etsy up 16. They were already on the list. So yeah, great. I'm glad everyone enjoyed this. And John was asking about psychedelic stocks, and I'm thinking you're talking about healthcare stocks that are, there is a new IPO to help individuals with their mental health. And certainly as they come up, they have those characteristics that I would like to see. Of course, I will be adding them. And Gord says that my course was an eye-opener for him, enjoyable and informative. Super glad to hear that. That's really great. Thank you. And Ted's asking about a pullback in the markets, and I am on the prowl. I talked about looking at those longer term charts, but certainly at some point am looking for a pullback, but it's going to be in that report each and every week. I had a period 2 weeks ago, the RSI, it felt overbought, just on the alert. But at this juncture, we're still in good standing. So let's see. So Brett was asking about my long-term emphasis and how it relates to options. It's not an emphasis that I particularly have. I will stay with the stock as long as the bigger picture, longer term trend is in place. But a lot of my calls within that do have a bit of a shorter term nature to them. And the service per month after the trial is $97, Donna. And then Helen said that she would drive to Bill O'Neill's offices in Santa Monica. Boy, you are taking things way back. That's amazing, Helen. His very first office was a very rundown one. I wasn't part of that in Santa Monica. That's amazing. Glad to hear that you are still just in this market, and particularly given the current phase that we're in. That's great. So position sizing is something that I am working on putting a piece out about. I've gotten questions quite a bit recently about that. It's not something that because the base of my clients, hundreds and hundreds, it is ranging from money managers, wealth managers to self-directed. So I'm not as defined as it relates to position sizing, but I am working on a piece now that will be an adjunct to the report. So let's see if there are any other questions here. And then there will be a new course coming out in March, actually. So I apologize if you're not able to get the current course. It could very well be because we are in the throes of revamping that course that was available before, and it will be available in 3 months, 2 months, 2 months time. That new course will be available. So we'll stay tuned for that. Oh my gosh, so there was an error on my website as well. I apologize. I'm sure they're working on getting everything fixed with that. And precious metals, yep, looking for gold. I did a piece today. I was on a panel with the strategist for Bloomberg Insight, and we talked about metals and some of the other commodities going forward. So let's see. Mandy, you're asking about the report. It doesn't come out daily. It comes out at this time, Sunday and Wednesday. If there are alerts, I will put out Tuesday, Thursday, and even Monday reports. That's not uncommon. When we're in periods of volatility, you will get one every day. But as it's structured, it is primarily Sunday and Wednesday. The trial period, if you're not finding the link working, it will be ongoing. So And Mandy is indicating that it does work now, so that's great to hear. And David was asking the early signs when the market is about to crash. I'll tell you offhand, one of the uh, earliest signs can easily be loss of leadership. If you see these leadership groups starting to roll over, that can often be an early signal if you're not as much into technicals. So discount broker, yeah, that's not something I'm quite as familiar with. There may be others that can share. Parker, there was a question about which discount broker I would recommend to place stop losses. So anyone else that's on still watching, if you can help Parker with that, I don't have a recommendation. So Frank was talking about got the course recently. And the course and bonuses were good. Yes, you can get an upgrade to that newsletter. Frank, if you want to email me directly, I can give you a little more information on that. And it does start with a macro outlook. Indeed, Greg, yes, the question is, does the report start with a macro big picture and then drill down to the sectors and industries? That's absolutely how the newsletter is designed, and then from there to those specific stocks. I guess some people are still getting an error message. And yes, I'm going to be giving a class. I'm in the process of developing a course, and eventually we'll have a trading room. So very excited about that with Simpler. And so David had a question about Chinese stocks, and I'm not adverse to them. If they have a good chart and a good fundamentally sound story, I'm all about that. The question, Raj, about the 50-day moving average on the close. Yes, you're going to want to wait for the close, and oftentimes maybe even the end of the week for that 50-day break signal to exit out of that stock. Carlos did get that link to open. It took a while. And you can contact support at simplertrading.com for that trial. They'll go ahead and help you get set up. They'll also help you get back to you with that link as soon as it's fixed, and you can take advantage of this offer, and we'll be sure and get you your report right away. So yeah, Earl is saying give the link a try. It's working now. And Colleen is saying how we can see the report. You will get past reports, and you will be able to open that. I am pretty sure. I don't see why you won't be able to open that tonight. So Stephanie still not available, but again, if you go ahead and reach out to support at simplertrading.com, they'll be sure and get back to you. So I believe what's happening is that we are seeing an overflow as far as the number of orders. So some people are coming in, some aren't. So I would argue that patience, perhaps wait a minute or two, and things will kind of smooth out, and we'll be able to take care of everyone. And that $7 trial is for 4 weeks length. And then from there, you can, of course, decide if you would like to go ahead and carry on. Yes, Gabe, too much interest. The servers, we're crashing systems all over. So let's see. Carlos, thank you. He's calling me a rock star. This overwhelming demand. That's I like that. So yeah, Leslie, if the link's not working, you can try even in about 10 minutes or just a little bit of time. And again, or if you don't have that time, you can reach out to support right now. But there is anticipation that in 5 or 10 minutes time, you shouldn't have any issues at all. So let's see if Maddie said he thinks the trial broke the 50-day moving average. I like that. I promise you, my brain, if I'm in traffic, I think of the relative strength of my vehicle it can really infiltrate your life. So let's see. I think that we are, everyone seems to be, as far as various questions. If you have further questions, you can reach me at meminvestmentresearch.com via support. Any number of ways, support at Simpler Trading, and always like to make myself available to answer questions and be available to help out. And I want to again thank you for taking time. I'm glad people found value in this, and I look forward to working with a lot of you. There was one other question: does it feature buy sell of stocks? Yeah, absolutely. That's a big component of that MEM Edge report. And Jeremy, you're welcome. I want to thank everyone here, and I look forward to seeing lots more of every one of you. I think it's just going to be a great year, 2021. I talked about the groups that have worked. We're seeing a lot of new groups. So that's always good for the market. So everyone have a great rest of your evening, and stay safe, and look forward to seeing you guys as we go down this road together. Yeah. Take care.